Hi everyone, thanks for joining me again. This is Christopher Aaron. It's the early morning hours of November 1st, 2015. I hope everyone had a nice Halloween. And I'm going to get right into it. We're just going to stick with the charts this time. And I just wanted to say something quickly for those who have been watching for a few weeks. Thank you for staying with me, and I do apologize if there are some things here that are a bit of a repeat for some of you. There's some new people joining every week, and I have some really strong messages that I'm trying to convey that I feel are not being presented in mainstream financial analysis. So I'm trying to kind of say those messages at least once a week for people that are just watching it the first time, so you can really get the gist of what I'm saying. And at the same time, I'm trying to provide updates and new information for people who are watching most of these videos. So for both those categories, thank you for joining me again. Let's get right into it. So the last 3 days in gold, it's been weak, back down to about 1140, just above 1140 for the close this week, after that big down day on Wednesday after the Federal Reserve non-decision to change interest rates, meaning to leave them the same. So how does that look on the 1 year chart? We've been calling for this retest here for a period of time, and it looks like we are just about to see that. Now I do have a higher target here for the intermediate term that I've been talking about as well, but the way these things work quite often when you break out of a consolidation like this triangular consolidation, which really was the finishing part of this year-long downtrend. It's a broken line, so we had that in turquoise. This year-long downtrend here was broken in early October, and now for the last 2 weeks or so has been coming back down. See that? Right here to 1140. So this is very typical for a market that breaks a rather serious trend. Not a long-term trend, but definitely a medium-term trend here was broken. So it came up and it's come back down. So we're in that vicinity. Typically it'll come right around to the line, or it'll come right to the apex of this consolidation, which would be in this region, 1120 to 1130. So we're watching for that, and when that is hit, you'll probably see something like a V spike. You'll probably see a day where it drops and then rebounds all in the same day. That could even be Monday or Tuesday. And from there, we expect it to rise back again to at least get to this upper point here on this short-term channel, this short-term teal-colored uptrend that is now formed. When a downtrend breaks, there has to be a new trend, even if that new trend is just a consolidation. But in this case, we have this uptrend that is now formed. So just zooming in on that, this is now taking it in a level. We usually go out a level to start, but I just really want to look at this. Here's that consolidation we had. We broke out in early October in gold. This, of course, using the GLD fund, which I do not recommend you to own for the long term. I think it's much better to own the metal. However, the GLD fund is very good for charting and for trading, for those who like to do shorter term trades or who just like to follow the minute by minute, hour by hour trend. This GLD fund helps. So, you had that consolidation here coming in, the breakout, and then look, you're coming right back down here. So what I'm saying is we could come right into this apex. That would be the lowest that I would consider valid for this retest, and then I'm expecting to accelerate. Now, what happens if this doesn't hold? What happens if gold comes back down to this line and then breaks further down? Well, let's back up and see where that would put us. These maps showing us here, this is now the 7-year chart, exactly the same commodity, gold again, all the same coloring, all the same lines, just backed out for the last 7 years. And here's that last little short-term uptrend that we have formed from the broken downtrend. And here's that target I've been talking about. 1230 to 1245. So if this retest were to fail right here, it's going to break through this uptrend line, and gold will come back down into the region of the low, of the absolute low for this bear market. And that will be the next point at which we reassess. So I would be watching that. That's just a hypothetical. I have no indication at this point that that is going to happen. But for those who may be asking the question, well, you know, how low can this go before we say it hasn't made a bottom yet? And that is how low. It could go right to this short-term uptrend line, but if it breaks through the short-term uptrend line, that is invalidated, and then we step back and we reassess when the next low forms. And that's really how technical analysis works. It's a map, and when the car veers off the road, so to speak, and gets a little bit lost, we take a step back, we get our bearings again, and we say, okay, what happened now? Did we hold this? Yes. This trend is then a valid uptrend line that's forming. Or did we break through it? In which case, where does the next low form? So we're watching for all that, and at the same time, we never want to forget, for anyone who's new, this is my number one point that I'm trying to make to people, is to not lose perspective, even though I just spent the last 5 minutes talking about all these short-term lines and uptrend lines, which are logical. However, they are definitely shorter and intermediate term. Long term, you had a multi-decade consolidation here in gold that broke out for good in 2009, came up, roughly doubled that all-time price, and has now come back down into the vicinity here of the previous all-time high. Still significantly above it, with this linear uptrend line forming since the very beginning of the bull market in 2001. So a very powerful move that we are watching for a bottom of this move. And what this will probably end up looking like when it bottoms, this will probably end up being a decade-long rise followed by a 5-year decline. This may take another 3 to 5 years to reach this level again, so you'll be looking at a decade or so cup, followed by, oh, if my mouse went off the screen there, I apologize, but I'm projecting off this chart. So a decade-long cup followed by a decade-long advance again. That tends to be how these multi-decade breakouts happen, this being the retest of the breakout from the multi-decade consolidation. So that's how I see things for the long term, although I do love to study and chart and trade in the short run when possible. So that's why I bring all that stuff here. Now we look at silver. Of course, the two are very closely related. Here we're looking at some nice junk silver, as they would call it. That's pre-1965 coins, quarters, and dimes, half dollars. I mean, I don't know why they call it junk. It's anything but junk. The metal is worth, I mean, the coins are worth almost 10 times the face value. So certainly not junk, even though it looks a little bit worn. It's if you ever come across one of those coins, you know, set it aside. So the action in silver over the last few days, also weak after that big down day on Wednesday. As I was predicting, I said on Wednesday, so we had this what looked like a false breakout, and I said false breakouts over significant long-term downtrend lines tend to lead to some immediate weakness in the days or weeks that follow. So for silver, it's a different situation here. Silver was attempting to break out of this 2-year downtrend, failed, and so now we take a step back and we say, well, where is the logical place for silver to now fall to? And that should come right here where I have this green circle highlighted on the downside. So somewhere in this 1475 to 1525 on the spot price. And where do we get these levels from? Well, this is now the short-term uptrend that has started from late August. You had a series of higher lows, August, September, October. When you have a few higher lows in a row like that, that forms a new uptrend line. Now, of course, it's a short-term uptrend line, sure, but it's still an uptrend line. So we have to respect that. We're saying there is a possibility that this low in September was the absolute low for the bull market. And the only way we know that is when a little bit more time plays out. So we had a failed attempt here to come up and break this line, and this will now come back down somewhere here into the middle of this range or to this uptrend line. And from there we'll watch. If it bounces at that uptrend line, we have another valid confirmation point that this uptrend line has some weight to it. In which case, when the blue uptrend line and the when the blue downtrend line and the teal uptrend line meet somewhere here, which is going to be around sometime in December, there's going to be a real battle. You're going to have traders, you're going to have hedgers, you're going to have bullion banks all looking at this convergence of a multi-month uptrend followed by a multi-year downtrend. And you're going to have, all these sellers who have been washed out of the market over the last few years, along with some new buyers, basically the remaining buyers, the people who still are believing in this metal are going to be coming in here at these levels and buying along this uptrend line. And we will see when two lines converge, only one can last. One of them will fail. So we will see which one it'll be. And of course, this being very important because when we back this out, I'm sorry, we're zooming that in now. This is silver on the 6-month time frame. And that was just to show basically a highlight here of that failed break up and then the quick drop back down. As I said, what tends to happen when you have false breaks above a line. And here we're seeing a better view of that short-term uptrend line I've been talking about since August. So these lines are converging, you can see that. And bringing that back out to the 5-year time frame, that's how important this downtrend line is here. This downtrend zone, I should say. It's a wedge pattern. Wedge patterns typically being bottoming patterns, especially when they come after a multi-year decline. So we're bumping right up against there. The breakout attempt failed there, but there's not too much farther that this is really going to fall in the grand scheme of things compared to the drop that's happened already. So up or down $1 here, $2 either way within this zone is not going to matter very much for long-term stackers or investors. This is really only going to impact people who are doing short-term trading as far as the action that happens here before the breakout. Looking at that at 10 years, again, the bottoming process. Look at that, such a beautiful chart. And the final chart for today, just to remind everyone who's in the silver market, what we really have going on here over the last 10 years is a series of these price spikes. And I actually didn't draw the arrow to this one, but the first one was in 2004. Look at this, spike and a drop back down. 2006, spike and a drop back down. 2008, spike and a drop back down. 2011, spike and a drop back down. And these drop backs are happening along a linear uptrend line. So every spike seems to be getting higher and higher, while the lows are fairly regular here, fairly well held on the lows. And when you look at the supply and demand metrics for silver, and you see that the majority of silver is being consumed by industrial fabrication, jewelry, and silverware at this point, you recognize what is causing these spikes. And what it is investors. It's private investors who are coming in and stacking the metal and taking the metal for private ownership. And every few years there's a new wave of people who wake up. Basically, they wake up to this thesis and they come in and they buy, and then a lot of them end up selling. But some of them stay, and that's why this line is rising. And then a few years later, a whole new round of people come in and buy, and then some of them sell. And then a whole new round come in and buy, and then people get scared and panic and sell. And then a whole new wave come and buy, and almost everyone sells. But there are still some left. And so this line is rising. The lows are still rising. And this market hasn't even really begun to take off. That'll happen, mark my words, within about 3 to 5 years as this price reapproaches $50 an ounce, and then the price breaks through 50 and 50 becomes a floor. In the same way, if you take a look at a chart, I'll do this another day, a chart of oil, a chart of copper, the $1.20 level on copper was very similar to the $50 level on silver. It held that level for about 30 years. And when copper finally broke through that $1.20 level, it has never looked back. So silver, in my opinion, is positioned similarly to copper about 10 years ago. It's still yet to exceed this. So there's a lot of value here, but you're going to have probably, one or two, probably more of these big spikes along the way. So hold the metal in your hand, remember what you have, and if you like to trade, then I'll try to put out some features for those sorts of people too. But the big thing here is to really understand what it is you're investing in and understand the potential from the chart standpoint. I mean, this is going to be forming basically a 40-year cup pattern. This is going to be an incredibly powerful pattern when this finally breaks here within the next few years. So just to wrap it up, we had gold retesting that level. We're looking for that to hold at 1120. If it fails to hold that, well, then we set up for the possibility of retesting the low for this bull market, which was 1075. I don't see that happening yet. Of course, I don't have the absolute crystal ball, but I have a fairly comprehensive system for analyzing all the data that is in front of me. And nothing that I see yet says that gold is going down that far, but we're watching that short-term uptrend line now to see how that approaches. Silver, unable to break the 2-year downtrend. We watched that. Guys, if you were following me for the last few weeks, we were watching that every video for the last 3 weeks, so it failed there. That said, it's not such a big failure. It's not like it's a topping pattern, I mean, it's a very short-term top, but it's not like we're talking a multi-year top like what happened in 2008 or 2011. So the support level from this failure to break the downtrend coming in just underneath there, around 1475 to 1525 for the next attempt at holding that uptrend line. And that could probably happen this week or next week. We're not talking a long time to watch these patterns play out. That's about it for this. Thanks for watching, everyone. And yes, I am working on a newsletter that will be out for free for people that will just contain some of these charts and written analysis that I'm not able to include in these videos. That's it. Thanks for watching, and I'll see you again in a few days.